Wall Street opened mixed in the spring. Traders are seeking the fragile balance between recession fears and the hawkish rhetoric by major central banks. Optimism about a recovery in China was offset by hawkish comments from Fed policymakers, so market sentiment has turned sour again. InstaForex analysts are ready to present you the trends and risks of the New York trade. The benchmark stock indexes closed lower yesterday. Yields of the US Treasuries rose because fresh inflation data escalated fears that the United States Fed would raise interest rates longer than projected. The Dow Jones was the only index to close almost flat, with a 0.02% downtick. The Nasdaq printed the biggest loss of a 0.66%, and the S&P 500 shed 0.47%. The three major indexes traded under pressure in the pre-market. The Dow Jones is again the only index to log a gain of 0.1%. The S&P 500 and the Nasdaq extended their slide. The S&P is expected to trade in the intraday corridor between 3,870 and 3,990 points. The New York session was volatile yesterday, and the official manufacturing PMI for China climbed to 52.6 last month, the fastest growth for more than a decade from a 50.1 in January. The market cheered this upbeat data. However, the data released later dampened market optimism. Commodity prices in the United States went up last month. It proves that inflation could get stuck at elevated levels in the light of the reports on consumer and factory inflation for January. Inflation data for Germany cemented expectations that the ECB would raise the repo rate higher than expected. Atlanta Fed President Raphael Bostic confirmed his opinion that the funds rate could reach its peak at 5.25%. Minneapolis Fed President Neil Kashkari said he would adopt a rate hike of 25 or 50 basis points at the policy meeting in March, so the funds rate might eventually climb above 5.4%. Following such comments, Fed funds futures now suggest that the target range will reach 5.5 or 5.75% by September from the current range of 4.5–4.75%. The prospects of a sharp rate hikes spoiled the sentiment on Wall Street. At the same time, yields of US Treasuries resumed growth. Yields of 10-year Treasuries, the gauge of the global borrowing cost, topped 4% on Thursday and hit a new 4-month high of 4.046%. Besides, yields of 1-year Treasuries dipped from 15-year highs printed a day earlier. What could be worse than that? The worst was a weekly update for the US Labor Department. The number of first-time jobless claims again declined by 2,000 last week. The actual figure was 5,000 lower than the consensus, and the latest reading remains at about 9 months low of 133,000 recorded in late January. This is widely evidence that the U.S. labor market is healthy, so the U.S. Fed has enough leverage for more aggressive policy. Unit labor costs, excluding farm employment, grew by 3.2% in the fourth quarter last year, much stronger than the consensus of 1.6%. It's the most considerable metric since the first quarter of 2021. On the corporate front, Tesla shares plunged by 5.8% in the pre-market because CEO Elon Musk gave a few details about when the company would roll out a long-awaited affordable e-car. Salesforce shares shot by 15.6% after the company developing cloud software predicted higher than expected revenue for the first quarter and doubled the buyback of its shares to $20 billion. Silvergate Capital shares tumbled by 31.3% after the crypto lender postponed its annual forecast and stated its readiness to continue the same business. Silvergate reported the loss of $1 billion in the fourth quarter because investors rushed to withdraw their deposits after FTX drama. Sentiment in the currency market is opposite to the stock market. The US dollar recouped yesterday's losses in full. Its index gained 0.5% intraday to trade at 105.95. The instrument is likely to trade in the corridor between 104.3 and 105.2. Yesterday, rival currencies exerted their pressure on the greenback. Today, the market dynamic is the polar opposite. The euro slipped against the US dollar today because inflation in the eurozone eased to 8.5% on year. The actual CPI is below market expectations. The US dollar found support from a rise in elevated yields of US Treasuries. Yields were driven higher because Neil Kashkari welcomed the rate hike by 50 basis points in March. Fed policymaker Christopher Waller is due to speak tonight. All in all, the US dollar is enjoying bright prospects today. The Canadian dollar is weakening against its American peer. The USD CAD pair failed to settle below 1.3600 and reversed upwards, having climbed by 0.2% intraday. The instrument is now trading at 1.3620 within the corridor between 1.3580 and 1.3650. The loonie is balancing between the fragile optimism about rising demand for commodities and the faith in the hawkish US Fed. The rebound in the US dollar prevented the loonie's rally amid growing oil prices. Oil prices gained ground today, though they were still unable to develop a rally. The optimism about a recovery in China is dampened by mounting inflationary pressure in the United States and Europe. Brent futures rose by 0.4% to trade at $84.47 a barrel, and WTI futures increased by 0.5%. The fact that China's manufacturing sector is gaining momentum benefited oil prices. Besides, imports of Russian seaborne oil are expected to reach a historic record in March. Risky assets are trading under pressure due to global economic uncertainty. The crypto market is no exception. Bitcoin skidded intraday but managed to stay above $23,000. The flagship crypto shed 0.9% before the opening bell to trade at $23,340. Other popular altcoins such as the Ethereum, Solana, Ripple, and Litecoin are trading higher. The information background is mixed today for cryptocurrency. The Reserve Bank of Australia, in tandem with the Digital Finance Cooperative Research Centre, announced the trial project of the central bank's crypto token. The project will be launched on March 31, and the results will be unveiled on June 30. What's more, at the same time, France is tightening the rules from new firms. The National Council in France passed the law which imposes stricter rules for new players willing to enter the French crypto industry. The technical forecast for Bitcoin has not been updated because the token is still consolidating below the resistance at $23,750. Support is still seen at $22,800, and breakout of any of these borders will push the price either down to $22,200 or up to $24,200. We wish you good luck in your trading and see you online tomorrow.